Hey Bowtie Nation, Joseph Hogue here with a very special Independence Day video celebrating your financial independence with 5 stocks I'm buying that can help get you there. And Nation, I know I'm going to sound like a broken record here, and it's more than a little ironic that we're talking about securing your independence, investing in the stocks that are going to benefit as the machines take over. But you need to be in front of this trend. I highlighted last week layoffs at Amazon, the country's second largest employer, as artificial intelligence does more of its jobs. News that followed layoff announcements at Microsoft, Williams-Sonoma, and a hiring freeze at Shopify. Consultants at McKinsey estimate that 1 in 3 jobs could be automated in the next 5 years, and more than half, 60%, will be altered by AI tools. Goldman Sachs estimates that 50%, half of all U.S. jobs, will be fully automated by 2045. And I don't know if it's funny or just tragic, but a sign of things to come. Major banks have started giving their AI agents their own login and email accounts and started calling them digital workers. Because it's not going to suck as much when you get replaced by a digital worker. I highlighted 5 stocks last week at that next level of AI, the companies that'll see their profits upsized as human workers get downsized, with the stocks up 12% just in 1 week. Nation, the AI and robotic revolution is not science fiction anymore. This is reality, and if you can't beat it, you sure as hell better profit from it before it's too late. That means investing in, getting a share of those profits from the companies that are going to make that happen. And first among these is a must-own picks and shovels play in AI, Astera Labs, ticker ALAB, up 29% since highlighting it in February, and with a huge backing from a tech giant. Folks, we are still in the first inning of this AI revolution, the build-out phase seeing trillions of dollars spent on data centers to train and run those programs, with just the 5 biggest tech companies forecast to spend over $1 trillion through 2027. But there is a bottleneck in those AI dreams. It's a supply problem that's just starting to become clear that the U.S. is going to need an end-to-end upgrade in its networking infrastructure. This is going to cost hundreds of billions of dollars and is going to be a boom like we've never seen before for the companies involved. And to understand why, consider how a data center works. Data is held in storage or comes in through users and must move through the servers, back to storage, and out to applications. Networking equipment like switches and routers is the plumbing through which that data moves. And right now, the nation's pipes are way too small. That means AI without a major network upgrade is going to be like your grandma's dial-up modem trying to stream Netflix. BNP Paribas expects sales of data center switches, which route that traffic, to double over the next few years, and for sales of back-end switches to quadruple. And that is where Astera Labs and its purpose-built solutions come in. Astera offers the kind of intelligent connectivity platform designed specifically for the compute needs of AI and workloads at scale. From switch to switch and switch to server products, it's built for the type of high bandwidth interconnects data centers need. And if the company's competitive position were in doubt, Amazon owns over 277,000 shares, worth more than $25 million, uses its products in its own cloud and data center operations. Here, Astera is a growth machine with forecasts for 77% revenue growth this year and 28% next to $900 million, as that data center buildout drives more demand for networking infrastructure. Next up, I highlighted shares of Alphabet, ticker GOOG, earlier this year, arguing that a breakup of the company could be the best thing for investors, with the combined market cap closer to $5 trillion on all the separate segments. But there's only one part of the Alphabet empire that has me really excited, one segment alone that could be worth a 60% pop in the shares right now. That segment, Waymo, the robo-taxi subsidiary owned by Alphabet, is now doing over 250,000 paid rides a week in 5 cities, on a fleet of 1,500 cars. Its next closest competitor in the space, the only competitor, Tesla, just started testing its cars in Austin last month with 5 cars, valued at just $45 billion in its latest funding round on just under $2 billion in annual revenue. Forecasts are for the company to grow sales by 129% annually for 5 years. That would take it to $113 billion in revenue by 2030. Now on that, if we consider that investors are paying $11.86 for every dollar in sales on shares of Tesla, that price-to-sales ratio, which I would argue is almost entirely on the hope for that robo-taxi growth, applying that to the Waymo would value the segment at $1.3 trillion over the next 5 years. A valuation of $1.3 trillion against the company's entire market cap of just $2.1 trillion right now. That would mean an increase of 60%, and that's ignoring the rest of the company, which is also undervalued. Doing a sum of parts evaluation in April, here I found the search, cloud, and YouTube segments alone would be worth more than $4 trillion. Combine that with the Waymo unit, and you've got a stock that could double in price and still be cheap. SoFi Technologies, ticker SOFI, has been one of my largest positions, and now up 154% since I started buying 3 years ago, with a $156,000 profit. But Nation, you know that profit was not overnight. I saw the potential and started recommending the shares in March 2022. I then watched them tumble lower as the entire market sold off into a bear crash. And of course, the comments blew up with how crazy I was being in this stock, but I kept that conviction in my analysis and held on. And that is what you need to do, folks. Do that deep and forward-looking research that we do here on the channel. Look for the stocks leading in that next big trend, the one Wall Street isn't talking about yet, and do not be afraid to stick it out while the rest of the market catches on. I started buying the fintech bank on its unstoppable growth, adding millions of members every year and growing revenue at a strong double-digit pace, all while it remade the banking experience. But that growth could be just the beginning as SoFi starts to integrate AI into its operations. From chatbots to fraud protection, document processing, and now credit scoring, SoFi is leading in the way for AI in banking. Just integrating AI into its Galileo platform decreased response time by 65% and cut chat drops by half. And with that, SoFi is expected to keep up that 20% plus pace of revenue growth this year and next to $3.9 billion. And while shares have gotten way more expensive than I normally like to pay for a bank stock at 2.8 times on that price-to-book valuation, this is still a tiny bank at just under $7 billion book value of assets and a lot of room to grow. And next here, Hewlett-Packard Enterprises, ticker HPE, is back in that picks and shovels idea, the AI theme, building the servers to house those tens of thousands of NVIDIA chips being sold. This is the next stage in that build-out theme. I pointed out earlier last month that HPE has so many catalysts, it couldn't help but run higher, and the stock is up 15% already. And one of those catalysts is the massive build-out of data centers, companies spending trillions of dollars on the servers that HPE makes. To give you a sense of how important these are, the semiconductors NVIDIA makes are like the neurons processing those AI workloads, and the server holding thousands of those chips is like the brains of a data center. Because of a cyclical slowdown in PC sales, revenue is only forecast to grow 8% this year and 5% next. But once those PC and laptop sales start higher again, likely to turn around later this year, you're going to see these estimates jump. But then another catalyst I pointed out last month just came through in a big way this week. The approval of HPE's $14 billion acquisition of Juniper Networks, giving it a role in that networking theme we saw with Astera Labs. Juniper books over $5 billion in sales across networking hardware and software, with a deep specialization in high-performance networking. Its acquisition of Mist Systems in 2019 brought a strong suite of AI and cloud-based products that turned into a competitive advantage, and shares of HPE popped 11% after that news broke, showing you just how powerful this combination could be and how it could add to HPE growth. While Juniper sales were only forecast to be up 7% this year and an abysmal 3% next, HPE is now going to be able to cross-sell products and lock customers in on the software. That should help to boost growth for the combined company, and even after that pop, these shares are still trading very cheaply at just 0.78 times on that price-to-sales basis. Topping this list, though, the one stock every investor needs to buy against the risk of AI job destruction, shares of Salesforce Inc., ticker CRM, and stick around because I'm going to show you how to get this stock for just $6 a share. While these other four stocks feed into that artificial intelligence theme, picks and shovels play into the growth of AI, Salesforce is deep into what we're really talking about here and securing your future against these revolutionary changes. That's because it is agentic AI, the business use of artificial intelligence, that is going to make all these layoffs happen. Agentic AI is an AI system that doesn't just follow instructions, but makes decisions, learns, and acts independently, like a personal assistant who doesn't just take notes, book flights, and respond to emails, but also fires your ass when you're no longer needed. Amazon itself has said that the use of AI will reinvent every customer experience, with more than 1,000 AI applications now in development across shopping, coding, advertising, and more. Even more telling, though, and a sign of things to come, e-commerce leader Shopify has instituted a new rule: no new hires unless AI cannot do the job. Think about that. Teams at the company are integrating AI into every part of their workflow, and for every task or job needed, the company will only hire someone if it cannot be done by AI. We've already seen how AI helped Klarna cut marketing costs by 25%, saving more than $10 million just in the first year of its use. While every CEO is saying that artificial intelligence is only going to create more jobs, here with Shopify, we have a company coming right out and saying it. If AI can do the job, a human will not. The agentic AI tools market at just $6.2 billion last year is forecast to grow to $420 billion by 2030. Growth of 52% a year, and frankly, I think even that is underestimated as AI continues to develop and can do more jobs. And here, no company is as close to making agentic AI a reality as Salesforce, already executing trillions of predictions on its Einstein platform every week, and more than 8,000 companies using its Agentforce agents. These agents are already being trained and used through sales, IT, healthcare, and security. And Salesforce's competitive advantage here is its scale, being able to train those agents across trillions of predictions that has been able to show a return on investment 3 to 4 times faster than competitor agentic platforms. Now, the problem with CRM has always been its slower growth than those other AI stocks, with sales forecasted up just 9% this year and next. But that also means nobody is expecting anything from this stock, and when that agentic AI growth hits, it's going to surprise the entire market. That's going to send the shares higher to at least an 8 or 9 times sales on that valuation basis, and an instant 20 or 30% return. So now that's the upside we're looking at for shares of Salesforce. But I know if you're not able to buy fractional shares, that $270 stock price might be out of reach. I want to show you how to get all that upside for just $6 per share. The synthetic long option strategy gives you the same upside in a stock's price at a fraction of the cost. The synthetic stock is exactly that, a way to get the same payoff in a stock from just options. And it really shows you the power of options investing. Here you buy a call option and at the same time sell a put, both at the same strike price. And this is one of the easiest option strategies. We can go here to the options available on CRM. And with these long-term buy and hold stocks, I like to use the longer-term options. So we're going to use the options expiring January 2027, a full 18 months to let that stock run. Here we see you can buy a call option at the $280 strike price for $47.50 each. That gives you the right to buy the stock for that price, $280 until that January expiration. But to offset that price, we're going to sell the $280 put option for $41.43 each. That lowers our total cost to just $6.07 per share. And you can see with this graph, buying a call option and selling a put like this is exactly the same exposure as buying the stock. Except instead of paying over $27,000 for 100 shares of CRM, you get that same 100-share upside exposure for just $607. That synthetic strategy is just one of the 29 option strategies I use to boost returns, lower my risk, and create income every month. To help you get started options investing, look for the link in the description for a relaunch coupon. Save $150 off the course. Over 3 hours of video, I start with the basics, then walk you through 29 option strategies, when to use each, and how to set it up, including a real-world example with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly how much you'll make. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. And that $150 launch discount is only available with the coupon code in the link I'll leave in the description, or just scan the QR code here. Get your $150 discount with the coupon in the description below and learn how to use options to boost your returns and create income. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.